Gautam Shah joining us next. He's founder Goldilocks Global Research. Gautam, thank you for speaking to us. You know, the pressure is showing. We've opened strong, but staying up there is a bit of a task even now. What are you looking at when you see the index this morning?
Good morning, Tamanna. I think the bigger picture is more important.
Yeah.
I think a year back, the market realized that at these valuations and the way economy was shaping up, there was no way the markets could have run up. I'm talking about last August, September, when we were close to that levels of 26,000. Thereafter, market men realized that there is definitely a problem with the economy. And probably thereafter, you had the government coming in and understanding the situation and taking a very important decision. So I think this can really kickstart the economy. And if it does it, then the market follows a discounting mechanism. And I think it's going to be up and away, because this is probably the only concern which the market was dealing with. Yes, we had Trump factors, the tariff factor to deal with, but that's also more or less discounted. And I think the price action in the last 10 days has been quite encouraging. So as a technician looking at the charts and trying to tie in the fundamentals, I'm tempted to believe that this move today can be durable, can be sustainable, and could potentially lead to a lot more upside on the upside, because anyway, there is a lot of liquidity waiting on the sidelines wanting to come in. So as you see the first signs of stability, which you are seeing today, I think the markets will sustain. From a numbers perspective, 24,850 for me has been an important resistance. We are trading above it right now. And if we do sustain above it today and close above it, I'm tempted to believe that we will move towards levels of 25,200 and eventually 25,600, the point from where we corrected in the recent past, and eventually go back to lifetime highs. Because let's not forget, the world is still in a bull market. India was not a part of the party. Now, possibly with all that has happened, India can be a participant to that global party as well.
Gautam, all I would ask is that eventually seems like so far away. It's, you know, eventually could mean anything. Eventually can be at any timeline. Is there a timeline you have in mind for reverting to lifetime highs on the Nifty?
Yeah, I think at Goldilocks, we don't play with words. So for us, eventually would mean 3 to 6 months. And
Okay.
I think markets are very fast these days. You know, if they have to go up or go down, liquidity is immense, momentum is great. So it doesn't take time for the markets to do well. So if we do sustain above 850 levels today, I think over the next 3 to 6 months, we could be approaching lifetime highs. But I still maintain my call that this is a stock pickers market. The bigger opportunities are in the mid caps and the small caps. And that's where one should focus upon.
So, Gautam, you know, we were talking about this earlier as well, because FIs are on heavy shorting right now. How important is it for the FIs to cover their short position to achieve this life high levels yet again? Because it's only the DIIs who are supporting right now.
Well, in some sense, I think the FI selling has not been as important as it was maybe a decade back when the Indian bull market was driven by FI flows. Clearly, I think we all know now that domestic flows have taken center stage. But I think, as you rightly pointed out, given the long-short ratio of the FIs and given the government push, I'm tempted to believe that if the economy does come back over the next couple of quarters, which is looking likely, then I think there will be a case for FIs to, look to cover their shorts and probably move out. However, I think there are immense opportunities in US, in China, and world over. So it's not that India is the best investing market in the world, but at least they will be in a position to cover shorts.
Okay. So in this scenario, Gautam, what are the sectors you would look at? Because a few of them already seeing a run up. Let's take auto for analysis. In auto, you have Escorts, M&M, all of these seeing a move of almost around 7 to 8%. Likewise, you have Aisha, which did not really anticipate a move, but is also trading with some smart gains. Would you still be a buyer at current levels, or you will wait for the heat to settle down right now?
I think the writing has been on the wall for the auto space. I mean, look at what it's done in the last 20 days. It's probably been the best performer. So in some sense, the auto sector knew that something positive is coming. And as I always say, the market is the best judge. And I think this is only the start of a much bigger move for the auto pack. So I'm tempted to believe that the auto index will go back to test lifetime highs. And I think there is easily 15% upside across the board in auto stocks from here. So I would definitely stay committed there. Metals we continue to like. I think I've loved the way the entire metals pack contract has behaved in the last 10 to 15 days. Look at Hindalco, Nalco, Tata Steel, JSW Steel. I think despite not so great fundamental setup, I think the price action has been encouraging. And I think the time has come for financial services to make a comeback. So insurance companies, housing finance companies, NBFCs, I think that's a big opportunity because 1 month of underperformance in the bank Nifty and everybody's gone negative on it. But I think the bigger story is intact and financial services will make a comeback.
And in this, would you prefer the NBFCs or the private banks? Will you be looking at PSU banks? What is the kind of preference over here?
NBFCs for sure. I think the chart setup is very clear. I think, and the RBI governor with all that he's done in the last 6 months and the positivity that he brings to the table, it's pretty clear that in the interest rate environment that we are expecting, NBFCs will be a big beneficiaries. The problem with the large private banks is that there is still FII selling happening there. I mean, if you have to sell something in India, it has to be the top, few banks. That's probably the reason you'll not see a runaway move, but the smaller NBFCs and even the larger NBFCs, I think, are the big opportunity.
Just trying to understand if, you'll see FII flows also reverse. Just your thought there since you mentioned it. FIIs have been moving out for a certain reason, and largely it is a tariff-pushed reason and the impact for the Indian economy, markets, etc. Do you see a bit of that getting cut down and reversing?
Well, let's be realistic. We are in a mega bull market worldwide. I mean, look at US markets. Yesterday, Alphabet was up 9%. It just tells you what's happening around the world. The Chinese market is at a 10-year high. Some of the European markets are at lifetime highs and still going very strong. So in this environment, to pick a market like India from an FII point of view, which is expensive, which has some issues around consumption and economy, might not be the best place. So I think let's not pin our hopes too much on FIIs making a comeback and driving this market higher. I still want to believe that it will be domestic driven.
Okay. Gautam, a domestic-driven market, what would it mean in terms of where banks go? Because they have been under pressure. Are you seeing a recovery with regards to Bank Nifty, and which are the candidates that you would bet big on now?
For the last 7 to 8 days, we kept highlighting in all our reports that 53,500 is a huge support for the Bank Nifty. Last 4-5 days, we've turned from that number. I'm tempted to believe that a bottom has been made, and there is a high probability of the Bank Nifty gradually moving back to levels of 56 to 57,000. So I think there is definite opportunity. I think a 10% upside on the Bank Nifty over the medium term, say 3 to 6 months, is entirely possible. But I still want to come back to that point that this is going to be a market about mid caps and small caps. That's the place where domestic money is flowing in, and that's the place where FI selling is not happening. And there are a lot of stocks with good valuations, great themes, hotels, travels, power, infrastructure, cement, fertilizer, I think clean energy. I think these are all themes which I think is going to attract a lot of domestic money. And that's where the real opportunity is for the next 6 to 12 months.
Okay, in terms of, I'm just coming back to FMCG for a bit, Gautam, because in terms of volume impact, it's going to be FMCG, right? The mega sort of downtick on rates. And I really liked it when Finance Minister said yesterday, all roti, chapati, paratha, everything is now in one rate. So the direction is very clear that you want to remove all of these unnecessary divisions. Is FMCG a play that you're looking at right now, an HUL and Nestle and ITC, etc.?
Selectively, yes. Let's not forget in the last 1 year, the FMCG index has seen a 25% fall. It's a mirror of the economy. And in the last 1 year, it has seen huge underperformance. But with what has happened in the last 15 days and today's move, it does seem as if at least the bottom has been made. But will it generate alpha over the next 3 to 6 months? I don't think so. I think the bigger opportunity is going to be in some of the other sectors, because many of these FMCG companies, consumption companies, are still very richly valued. So just to expect them to start getting into a new trend because of the GST push in anticipation of consumption picking up, I don't think might be the right strategy. I would still go with some of the top stocks in auto, where I think the visibility is much better.
And what is the pecking order in these top stocks in auto?
Well, I don't want to talk about specific names here, but I think some of the top four-wheeler stocks is something that we like, and I think across the board, the top 5 names will stand out.
Okay. Thank you so much, Gautam, for speaking with us. Fast and furious was that interview, as well as was the timeline of that GST decision. Thank you so much for speaking with us today.